All right, to start off, big news. A Hong Kong court on Monday ordered the liquidation of China Evergrande Group. And this is a move likely to send ripples through China's crumbling financial markets as policymakers scramble to contain the deepening property crisis. Julianne Satherwith reports.
Chinese property giant Evergrande has been told to liquidate in a move set to send ripples through financial markets. The Hong Kong court gave the order Monday morning. It comes after the world's most indebted developer was crushed by more than $300 billion in liabilities. The firm defaulted on its debts back in 2021, throwing the country's whole property market into turmoil. Now the liquidation order is likely to deepen the crisis in the sector and jolt China's fragile capital markets. Beijing was already grappling with an underperforming economy and stocks wallowing near 5-year lows. Now any new hit to markets could undermine revival efforts and ramp up demands for more stimulus measures. Evergrande had been working on a $23 billion debt revamp plan with bondholders, but those efforts were scuppered last September when billionaire founder Hui Kai-yan was put under investigation for suspected crimes. A liquidation petition was first filed back in June 2022, but the proceedings were adjourned multiple times as Evergrande scrambled for a survival plan. At least 3 other developers have already been ordered to liquidate by Hong Kong courts.
Now, after being liquidated, an official liquidator will now be appointed to sell Evergrande's assets to repay $300 billion worth of liabilities. And creditors are expecting to recover less than 3%. Most of Evergrande's assets have already been sold or seized. A liquidator could sell the 2 units Evergrande has left worth about $970 million. But finding buyers could be difficult. Most of Evergrande's other assets have already been sold or seized by creditors. And China's already fragile capital market could be hit with shockwaves from Evergrande's failure. Experts don't expect this liquidation to become a blueprint for other embattled developers, since this process will involve many authorities and political considerations. And now joining us is Brian McCarthy from Macro Lens. So to start off quickly, give us your take on the whole Evergrande situation being ordered to liquidate.
Yeah, certainly the news hits in an environment of extreme angst regarding Chinese equities. So it was taken bearish by Chinese equity indices last night. But in effect, I don't really think this is going to change the story all that much. It's unlikely, in my view, that the domestic authorities in China will abide by a winding down order from a Hong Kong court. I think it was about a couple of years ago they did agree to accept rulings from this court. But the New York Times reported yesterday it's happened 5 times since 2021, and they've only accepted 1. So there's actually already precedent for Chinese authorities to ignore this kind of thing. Given that Evergrande still has some $90 billion worth of apartments that people have paid for that they need to deliver, it's extremely unlikely Chinese authorities are going to let this company be unwound in any way that would interrupt the process of trying to get those apartments completed. That's sort of Evergrande's final mission is to get those people their apartments, and then it'll be disposed of in some way.
So if Chinese authorities are weighing the pros and cons, do you think it would be more beneficial for them to let things be as it is right now instead of liquidating?
They don't seem to have a better plan. To some extent, I'm surprised they haven't simply nationalized Evergrande, handed off the assets to state-owned developers, and had the state fill the hole in the financing to get these apartments delivered. But I think the problem extends well beyond Evergrande. There are a number of developers that have unfinished apartments and terrible finances because the entire real estate market is effectively falling apart. So I think they're just going to sort of stumble along, try to arm twist the banks to provide sufficient financing to these developers so that they can get these apartments finished. The problem is the apartments are already paid for. So any money the banks lend is basically a black hole. It's a subsidy to make up for the money that Evergrande's already taken in from home buyers and blown. So, somebody's got to somebody's got to fill that hole. It's going to have to be the state if they want these people to, actually get what they paid for, which is an apartment that's supposed to be under construction.
So basically, you're saying bluntly that Chinese authorities are not going to listen to the order from a Hong Kong court. But maybe paint us a picture, like if Evergrande were to be liquidated, what would the impact be on the overall economy in China?
Yeah, I mean, it's almost impossible to imagine it being liquidated. If they actually were to try to find a clearing price for Evergrande's assets, it would simply accelerate the accelerate the process that's going on, which is we are finding what these real estate assets are really worth. And at this point, anecdotes suggest residential real estate's been marked down, say 30%, maybe. Is it going to be 60%? So if you actually sold Evergrande's assets and tried to discover where the market would actually clear these things, I think then again you'll very rapidly find out that some, call it $80 trillion worth of Chinese real estate isn't worth 80 trillion, it's worth 40 trillion or 30 trillion. And that is going to be a very serious blow to confidence throughout the Chinese economy. Now, this is the process that's happening anyway, but they'd like it to happen over 3 or 4 years, not in some kind of fire sale fashion.
So you mentioned state buyout of Chinese Evergrande, a nationalization of the company. Would you consider that as a bailout?
Yeah, I mean, again, somebody's going to take a loss here, and if it's not the state, it's going to be these poor people who prepaid for apartments and are getting delivered nothing. So they can let them take the 90 billion loss and just have Evergrande fail and say, tough tiddlywinks, you don't get the apartments you paid for. Doesn't seem all that fair, and I think there's an assessment that might create some kind of societal stress that they don't want to deal with. So if they want to get those apartments delivered, somebody's going to have to subsidize that. It's going to have to be the state. They tend to do this through the banks. So the banks will make loans on which we all know they're never going to get paid. They fund those loans by creating deposits. So now people have to hold deposits against assets that aren't really there. At some point, the credibility of the banking system has to be called into question. And this is happening. We're in the early stages of this because you can see people don't want to hold RMB. The RMB is under persistent stress because they're basically ultimately going to fund all this with printing money, and people don't want to hold that money. So, this is ultimately, I think, where the Chinese control over this process, the policymakers' control over the process breaks down. It's through the currency, which is why they're fighting mightily to maintain the credibility of the currency. But ultimately, it's going to be a losing battle.
And what about creditors? How do you think they're feeling right now? What do they want?
They might get a few cents back. I think there's long been speculation that these offshore creditors to Chinese companies didn't really have much of a leg to stand on if it came to a situation like this. So it really shouldn't be any surprise that they don't have full rights as creditors that they might in a Western market where rules are set and abided by. So we always knew that these offshore creditors had limited recourse to onshore assets, and I think that's what we're going to find out. So there are a handful of offshore assets, Evergrande's stake in a couple Hong Kong listed companies, their EV company, their management company, maybe some property assets offshore that they can seize, but it's going to be a handful of cents on the dollar they'll end up getting back on these bonds.
Do you see Evergrande potentially having a partial liquidation? It's based in China, but it still has operations in Hong Kong.
Yeah, I suppose the Hong Kong stuff, again, will probably be seized and liquidated, but Evergrande itself as a domestic Chinese entity is just going to wither away over a number of years, I would suspect.
So is that the path for Evergrande?
It's a path for a number of Chinese developers. I'd say, maybe they'll end up being 15 or 20 large, either state-owned or very well connected to the state developers that will serve to enact the annual central plan as to how many residential apartments get built. So they're never going to go back to a model where speculators can drive outsized supply in real estate. The industry is going to be folded into the central plan. They'll decide how much low-income housing to build. They'll allow the developers to build a certain, volume of housing for upper middle class and richer individuals who can buy bigger homes. But they're never going to let that segment run wild again.
All right, final question. Any way to fix the property crisis in China?
No, there's no way to fix any of this. I know international investors keep looking around the next corner for some big policy, bullet to fix this. There is no fixing it. You're going to take the value of residential real estate in China down by tens of trillions of dollars. Okay? It's just going to have effects on credit transmission in China. It's going to have a serious effect on consumer confidence. It's going to affect the revenue generation of every business in the country. So there's no fixing it because the error was made. The money is lost. The resources are wasted. It's history. One way to fix it is to print a bunch of money to fill that hole. But if you want to accept a 30% devaluation of the RMB, they could inflate away the problem to some extent. Which ultimately they'll have to do. Is that a fix? It's not really a fix because, again, you can't fix the past. These resources were wasted in assets that are really not needed.
All right. Thank you very much, Brian McCarthy, Chief Strategist, Macro Lens.
Thanks, Tom.
Meanwhile, a policy escalation has been announced by regulators in China to stem a worsening stock market sell-off. China has officially limited short selling after using informal efforts for months to try and curb a lengthy $6 trillion stock market rout that started in 2021. Investors who buy shares will not be allowed to lend them out for short selling within an agreed lockup period. China's Securities Regulatory Commission said this will, quote, create a fairer market order. Experts are casting doubt on the effectiveness of the ban and say China's equity market stabilization will depend on confidence. And for a second straight year, profits from China's industrial firms have taken a tumble. They're reporting a 2.3% drop in 2023. That comes after a 4% decline from the year earlier. The repeat drop in profit is due to China's shaking pandemic recovery, and the country is also struggling with sluggish demand at home and abroad, a housing downturn, and of course, deflationary risks. One economist also points to overcapacity in some industries, which potentially led to sharply lower prices from factories. And now in the U.S., prices rose marginally in December, keeping the annual increase in inflation below 3% for a third straight month, bolstering expectations that the Federal Reserve will start cutting interest rates this year. Lisa Bernhard has more.
U.S. inflation continues to trend lower, according to a closely watched report out Friday. That's not only good news for consumers, but underscores the case that the Federal Reserve could begin cutting interest rates this year. And it comes at a crucial time. The Fed meets next week to discuss when rates might begin to come down. The Commerce Department's Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, showed prices in December ticked up a mere 0.2%, in line with economists' expectations. Prices for all of 2023 increased by 2.6%. That's a significant drop from 2022, when they rose by more than twice that. The so-called core PCE, which strips out volatile food and energy prices, rose a modest 2.9% last year, the smallest advance since early 2021. Cooling inflation has bolstered expectations that the Federal Reserve could start cutting rates as soon as March. The timing of the first rate cut, however, is uncertain, as the job market and consumer spending remain strong. Financial markets have pushed the odds of the Fed's first rate cut to later in the spring in a nod to the economy's continued resilience. The central bank is expected to leave its rates unchanged at its meeting next week.
A well-known commodities trader said that it was assessing the security risks of further Red Sea voyages after firefighters put out a blaze on a tanker attacked by Yemen's Houthi group a day earlier. Olivia Chan has more.
Commodities trader Trafigura said on Saturday it was assessing the security risks of further Red Sea voyages. This came hours after firefighters put out a blaze on a tanker attacked by Yemen's Houthi group a day earlier. Trafigura said all crew were safe and the vessel is now sailing towards a safe harbor. The U.S. military said a U.S. Navy ship and other vessels provided assistance after the Marlin Luanda was hit. Trafigura said firefighting effort had been supported by Indian, US and French Navy vessels. The Houthis claimed responsibility for this attack on Friday. Marco Forgione is the Director General for the Institute of Export and International Trade.
So the attack on the Marlin Luanda in the Gulf of Aden signify a great extension and escalation from the Red Sea to the Gulf of Aden, so geographical extension, and also with the type of weapons. The missile used yesterday was a ballistic missile, and the Houthis started their attacks in the Red Sea using drones. So we're seeing a technological expansion and a geographical extension.
Some shipping companies have suspended transits through the Red Sea and taken much longer, costlier journeys around Africa to avoid being attacked by Yemen's Iranian-backed Houthi group. It began launching waves of exploding drones and missiles at vessels in November in response to Israel's military operations in Gaza. The Marshall Islands-flagged Marlin Luanda issued a distress call on Friday and reported damage, U.S. Central Command said in a post on X, formerly Twitter. A Trafigura spokesperson on Friday said the tanker was carrying Russian oil product below the price cap in line with G7 sanctions. About 8 hours after the Marlin Luanda incident, the U.S. military destroyed a Houthi anti-ship missile that was aimed into the Red Sea and ready to launch, Central Command said.
United Airlines has approached Airbus about buying more jets to fill a potential void left by the delayed Boeing 737 MAX 10. And this is in a likely trade-off to ease deadlock over a long-delayed separate order for larger jets. This is according to industry sources. Here's the report.
United Airlines has been one of the biggest victims of the turmoil at Boeing. Dozens of its 737 MAX 9 jets were grounded following the mid-air blowout of a large panel on one operated by Alaska Airlines. Now United also faces delays in getting new planes, after the incident raised doubts over regulatory approval for a new model of the MAX, for which it has placed big orders. The chaos has the airline considering its options. Reuters sources say Chief Executive Scott Kirby flew to France for talks with Airbus. He's said to be sounding out the possibility of an order for its A321neo jets. Trouble is, they're in hot demand and all but sold out for years to come. However, Bloomberg News says Airbus is trying to buy back delivery slots from other airlines in a bid to construct a viable offer. United has 277 Boeing MAX 10 jets on order. That's a larger variant than the one in the blowout drama, but could still be affected by the troubles at Boeing. Kirby said last week that United hadn't cancelled the order, but he added that the US plane maker wouldn't be able to meet the contracted delivery dates on many of the aircraft. Signs of a possible Airbus deal have reportedly raised concern at Boeing, which shares historical roots with United. But Monday later brought hope of a silver lining. Irish budget airline Ryanair, one of Boeing's biggest customers, said it would take over any MAX 10 orders dropped by US carriers.
Now, French farmer protests have been taking over roads and vandalizing government buildings around France. Promises from government officials have not given the farmers much confidence that there's going to be any significant changes. NTD's Sean Marshall has the details.
French farmers blocked major highways to Paris on Monday, along with a number of other extreme actions as they pursue protests over a range of grievances. Measures announced by the government have not satisfied the protesters.
It's always a lot of promises. They announced certain practical measures, but there are some which will take time. So we wonder if he will follow through with his remarks. I'm still not entirely convinced by this proposition.
Farmers in France, the EU's biggest agricultural producer, say they are not being paid enough and are choked by excessive regulation on environmental protection. Some of their concerns, like competition from cheaper imports and environmental rules, are shared by producers in the rest of the EU, while other issues, such as food price negotiations, are more specific to France. The EU's decision to remove quotas and duties on large imports from Ukraine after Russia's invasion, along with ongoing talks for a trade deal with the South American bloc Mercosur, have increased concerns among farmers about facing unfair competition in markets for sugar, grain, and meat. The imports are resented for pressuring European prices while not meeting environmental standards imposed on EU farmers. Farmers argue that a push by the government and retailers to bring down food inflation has left many producers unable to cover high costs for energy, fertilizer, and transport. The French government is ending a tax discount on diesel fuel for farmers, part of its plan to move towards cleaner energy.
There are a few positive points for comments. There is a lot of blah blah, and there are so many things to do that haven't been done for 20 years. There's a lot of work to do, and it's nothing but blah blah blah.
Green policies are seen as contradicting goals to become more self-sufficient in production of food and other essential goods in the light of Russia's invasion of Ukraine. Traffic around the Belgian capital was also disrupted by angry farmers on Monday, and about a dozen tractors made it through to Brussels' EU area where they honked loudly. Farmers and truck drivers in Romania have also taken action this month with protests against high business costs, blocking access to a border crossing with Ukraine. Sean Marshall, NTD News.
The moon will completely blot out the sun for millions of people in North America along a path crossing from Mexico into the United States and then Canada in a total solar eclipse, occurring on April 8th. Here's more on what you need to know about the event.
On April 8, millions of people in North America will be in the path of a total solar eclipse. Stretching from Mexico into the United States and Canada, the moon will completely blot out the sun. Here's what you need to know about it. In a total solar eclipse, the moon passes between the sun and Earth. That covers the face of the sun along a small path of our planet's surface called the path of totality. The daytime sky turns dark as a result. In places along the path of totality, people will be able to view the sun's corona, the star's outer atmosphere, which is typically not visible because of solar brightness. People observing from outside the path of totality will see a partial eclipse, but a cloudy day could spoil the view.
Amazing.
According to NASA, the April 8 eclipse will begin over the South Pacific. The path will reach Mexico's Pacific coast around 11:07 a.m. Pacific time before entering the United States in Texas. Its path then takes it through various states including Oklahoma, Illinois, Kentucky, New York, and Maine. The path then enters Canada in Ontario and journeys through the eastern provinces. It will exit on the Atlantic coast of Newfoundland at 5:16 p.m. Newfoundland time. A partial eclipse is due to be visible for people in all 48 contiguous U.S. states. It is unsafe to look directly at the bright sun without using specialized eye protection. Experts say viewing an eclipse through a camera lens, binoculars, or telescope without making use of a special purpose solar filter can cause severe eye injury. They advise using safe solar viewing glasses or a safe handheld solar viewer. And note that regular sunglasses are not safe for viewing the sun. The only moment it is considered safe for people to remove eye protection during a total solar eclipse is the brief time when the moon completely blocks the sun's surface. After this one, the next total solar eclipse viewable from the contiguous United States will not occur until 2044.